Hello everyone, thanks for joining us today and welcome to this educational presentation of a very consistent strategy that I've been trading for over 4 decades now. In some capacity, I have been trading this method since I was taught this very same strategy on the floor of the Pacific Stock Exchange. Now, for example, let me share with you this chart. I'm going to share with you 2 rules today where you could have actually generated a buy signal. But most traders, the way they've been taught and educated, is that they first look at this chart here and look at maybe going back 2 or 3 weeks and say, well, there's no real structure here. I'm kind of going to stay out of this market because we're basically going sideways. And perhaps you like to look at support and resistance, and maybe that class that you took or that course that you purchased is telling you that there's resistance right here. So if anything, you're actually going to look to short this before you get involved. But with the 2 rules I'm going to be sharing with you today, along with an entry method, you could have actually generated a buy signal right here and potentially captured upwards of 47 points in the next couple of weeks coming into the 2nd week of February. So this is what I'm going to be sharing with you today. Once again, a strategy that I've been trading for nearly 4 decades, over 4 decades I should say, and has very high levels of consistency. Welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate you as traders. The only reason why we want to educate you is because, in our opinion, that's the main reason why traders fail. If you've been struggling, if you've been very frustrated with your own trading, with your own investing, well, most likely it's because you're doing the same thing over and over again that I was taught some 4 decades ago that really shows no levels of consistency. And most traders love to listen to someone. After all, I'm constantly asked this questions where traders will say, well, Steve, why don't you just post the way you trade and I'll just piggyback on the trades that you take, and why don't you just tell me what you're buying and selling, because isn't that the way we've all been taught? You're supposed to follow traders who've been trading for a while and who's so-called successful traders. Well, no, it couldn't be any further from the truth, because everyone trades differently. All right, I may trade a certain way. I may be able to take on tons more risk than you take. Someone may say, well, I can't take on that risk. Either I don't have a big enough trading account, or I can't sleep at night knowing I take on that risk. Or perhaps I take on too little risk. And maybe you say, well, this is not enough, Steve. I want to give myself more contracts to trade. I want to have more shares to trade. And I have a very structured plan. See, no one should trade and follow and mimic someone else's trading. You have to make your own decisions. Well, this is where Pro Trader Strategies and I come in to fill that gap, because we provide you with the education so that you can be making those decisions on your own and trade according to your own personal needs. Now, I've been trading for over 4 decades now. I first started trading on the floor of the Pacific Stock Exchange, on the floor for a total of 16 years. 9 of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist was someone who made markets in roughly about 50 or 60 stocks. So I made markets on the floor during the crash of '87 and the bull market after that. So I've traded just about every environment you can think of, and I've traded just about every system, every technique, every method you can think of. Most of the things that you think are brand new or that are a new indicator, a new technique, have been around for ages. They've just been rebranded. So what I do in my 4 decades of experience is just share with you and try to teach you the things that have shown high levels of consistency. And we work together, putting together a format, a plan for you so that you can ultimately make your own trading decisions. Now, one of our best strategies in terms of consistency is what I'm going to be talking about today. I'm going to actually share with you a couple of the rules to that method. But before we begin, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, remember that all examples are strictly for educational purposes only. Now, I'd also like to invite each and every one of you to follow us on Twitter. I post different information on a daily basis, anywhere from signals our strategies have generated. In fact, a lot of current signals have been generated in this up market. Our strategies generate signals in both up and down markets, even sideways markets. But not only that, we share with you those examples for educational purposes. We also share with you little bits of financial wisdom. So there's lots of great free educational information on our Twitter page. Feel free to follow us on Twitter. Okay, so once again, as I stated in the opening statements, we are first and foremost an educational company. This is an educational presentation. We're a little bit different from other webinars you may have attended in that we don't promise to have a system that will have you retiring in 6 months. We don't promise to have an indicator that never loses, it never fails, is back-tested 20 years and is always right. We don't believe in those things. We're simply trying to educate you so that you can trade with the specialist edge. It's the same edge that was taught to me some 4 decades ago, and I believe it has been the cornerstone to sustaining me. And I really feel if I am able to teach you the same things, hopefully I will be able to sustain your trading going on many years in the future. Now, since this is an educational classroom today, I want to take all your questions. But unlike other presentations you may have attended, I don't want to stop at each slide, because if we pause for every slide, we'll be here far too long. I don't want to take up all of your Friday. So please wait till the end of today's class to ask any questions, probably in the next half hour or so. Then we'll conclude, and I'll reserve the last portion for any questions. Okay? The only question that we answer is the most common one, and that is this being recorded? Many of our traders have technical issues with their computer or their internet. Oftentimes, if you turn off and turn back on again, the problem will be resolved. But if you're having technical issues, or if you have to leave early, we will send each and every one of you a link to this recording. All right, so once again, if you have any questions, we have a good crowd here today. Let's not stop at every slide. Please wait till the end to ask questions. Okay, with that stated, let us begin today's class. Now, I want to talk about one of our most consistent methods. You've heard me talk about it before. This is Specialist Trading Strategy number 4. I was first introduced to this when I was trading on the floor of the stock exchange. In fact, it was the very first method and strategy that my mentors taught me, and I'm still using it in some capacity today with my own personal trading. Now, let me share with you some of the highlights. It's for all traders, okay? So don't worry if you've been trading 30 minutes, or for that matter, if you've been trading 30 years, okay? We have hedge fund traders in our courses that take strategy number 4 courses. We also have people that have only been trading for a week or so. It doesn't matter, because everyone gets the same basic format in our courses. And then we work out from there, teaching you how to enter, teaching you different ways to exit, teaching you different ways to place your stop. So we give you a basic format, and then we work with you. Now, it was originally designed for traders looking to catch quick momentum moves. When I first traded this on the floor, I would be in and out in a matter of probably minutes, 1 or 2 minutes, because I was trading 60 stocks, and as a day trader on the floor, you didn't want to hold a position, not even overnight. But we have devised ways to hold on to positions. If you like to be a swing trader, you can hold on for days or weeks. If you're an investor, you can hold on to some of these positions for months, and we show you how to do that. Now, its intensity level is a very moderate number 2. Not very difficult, not very slow. It's just right in the middle in number 2 intensity. It only uses one indicator. That's how simple this is. And we pride ourselves at Pro Trader Strategies and Specialist Trading on how simple our education is. We really do. I mean, we focus on that entirely in everything we teach and the entire process, because trading should be simple. Many of you have taken courses or classes where I'm sure, just like myself, when I was doing the same thing some 40 years ago, I would buy a course or a class, and I knew after the first 10 minutes that this is far too complicated. I don't understand one thing they're talking about. Well, all of our tools and all of our strategies are extremely simple. We only use one indicator in strategy number 4 because it's based on a pattern, a specific pattern recognition. Now, the beauty of strategy number 4, once again, you can apply it to any time frame, any direction, and any market. Now, today I'm going to have a propensity for showing you a lot of examples with stocks, but please don't think that this is just a stock strategy. You can trade this with futures, intraday futures. You can trade this with currency pairs, commodities, Bitcoin. It makes no difference what you're trading, because wherever this pattern appears, there's a high probability signal being set up. So don't worry if we show you the majority of the examples with stocks. I'll also show you some other market examples as well. Now, if you're a member of our course, you're going to receive automatic buy and sell arrows on, either on your own platform. We can supply you with add-ons for your own platform, or on our platform. But remember, we supply these for you and provide them for you for educational purposes only, because in our courses, we want you to be able to spot a strategy number 4 signal just by simply looking at the chart. That's how simple it is. And you should get to that point. But while you're learning in the course, we supply you with these up and down arrows so that you can check your work. And I'll show you exactly what that process is in just a few minutes. Now, our edge at specialist trading, as I've said over and over again, is consistency. We don't promise to never have losses, the way I'm sure you've heard in some other advertisements of courses or strategies or techniques. We don't promise that. We will have losses from time to time. That's okay. What you should be concerned about is a method that's able to recoup those losses. Hopefully, the sooner the better. That's what our methods do. When we have losses from time to time, we've seen through time and through what testimonials have told us from current members that many times we are able to recoup those losses in the next trade. So we're all about being consistent. A two-step forward, one-step back approach. Okay, so let's go over the rules. And remember, these are the basic format rules. You're always able to edit and alter them as you see fit. But these are the basic rules that we give you in the course. And I'm going to share with you two of them, and then I'm going to share with you the basic entry. All right? The first rule is, if a buy signal is generated, it can only be entered above the 50-period moving average, okay? This will increase your odds for consistency. Now, how many times have you bought something, and the minute you buy it, it goes straight down, right? Or the minute you sell something, say you think this is a great short, and you don't have to sell the stock or sell a future, you can actually purchase a put. But the minute you bet that thing you're trading, whatever market it is going to go lower, it goes straight up. Most of the time, it's because you're out of sync with this simple rule. You're probably buying when price is below the 50 period, and most likely selling when price is above. You see, you will have a higher level of consistency if you only buy when price is above the 50. Now, the same rule applies for going short. Sell signals can only be entered below the 50. Now, if you don't believe how powerful this tool is, now, once again, I say powerful, but I'm not saying it's guaranteed to work 100% of the time. But we're talking about consistency. Remember, two-step forward, one-step back. Go back and check your last 10, 20 trades. Most likely you lost because you were buying below the 50 and selling above. Okay? So that's our first rule. The second rule with strategy number 4 is buy signal bars must close in the top 25% of their range. When we say signal bars, that's the bar where everything comes into play. In other words, all the rules and all the requirements have been met. And it doesn't really matter what strategy you're talking about. You could have a strategy based off of news, fundamental news. You could have a strategy based off of another indicator or a ton of indicators. But when all the rules and requirements have been met, that usually happens on a specific bar. That's your signal bar. That's where you decide to enter or to sell or to buy. Okay? Now, once we have all the rules come into play, and remember, in order to find the basic rules of strategy number 4, there are really only 3 basic rules. I'm sharing 2 of them with you today. Once all the rules come into play, that bar, whichever that bar is, must close in the top quarter of its range. Okay? That's a clue coming from the market telling you that it wants to go higher, because you don't want to buy something and then have it kind of sit around for a while or have it go lower, stop you out, and then go up. You want it to continue to go up once you purchase it. Well, this is not guaranteed, but it is giving you a great edge that most likely it will continue. Now, let's say you're going short. Well, price is below the 50, and on top of that, you want to see the signal bar close in the bottom 25% of its range. Once again, this is an extremely powerful tool and an edge coming from the market, not some guy in a chat room, not some guy on TV, not even some guy in a webinar, coming from the market telling you it wants to go lower. Okay? So, once we have these 2 rules in play, we have one more rule, that's the pattern recognition rule, that will designate that we have a valid setup bar. Now, I can't share with you what that 3rd rule is. That wouldn't be fair to the people that purchased strategy number 4 course already. But I've already given you the majority of the basic rules. Now, let's say we have a strategy number 4 signal in play. All right, how do we enter? Well, I'm going to share with you the most basic entry pattern. Okay, now remember, as we stated, in our courses, we teach you a basic format for entry, for exits, for stop placement, but we give you also roughly about 5 or 6 different variables for entering, for exiting, for stop placement. Remember, you're in charge of your trading, not us. It's more like a buffet where you can pick and choose what you'd like to have in the buffet. You're still in line with the basic course, but you're being a part of the process. This is what we encourage. This is what we want our students to do. So the basic format for entry is you're going to enter to buy one tick above that signal bar. Remember, the signal bar is above the 50. It closes in the top 25%. And this is where all the rules have come into play, all the requirements. Now, if you get a sell setup, all right, well, obviously price is below the 50. Now we closed in the bottom 25% of the entire range of the bar. And you are going to enter to sell one tick below that signal bar, okay? So I've given you two of the basic rules for the structure, for the format of a setup. And I've given you the basic entry, okay? Let's look and see how this is established. Let's go back and look at the IBN. Now, someone looking at this once again will say, well, Steve, I can't really get an idea here. Obviously, we went up, then we went lower. And then the last bar here is up very strongly, but this particular indicator I purchased says that we are really overbought. In fact, the only thing we're doing here is filling this gap, okay? We had a gap down, and we just filled it. Most likely we're going to head lower. This is not confirming this according to the divergence course I took. And then lastly, this course I took about support and resistance says that there's a lot of overhead resistance here the institutions are selling. So I don't, really look at this as positive or even negative. I just really don't have any clear idea, so I'm going to stay away from this, okay? To see how every justification I made for trading this was based off what someone or something else was telling me what to do. This is the way 99.9% of traders trade. And the reason is because this is the way the entire industry is based off of. Having you rely on someone or something else to tell you what to do, okay? Now, at Specialist Trading and Pro Trader Strategies, we do the opposite. We teach you to listen to the market, because that's the only thing you should be following. Not some guy in a chat room, not some $10,000 course, but the market, all right? Most people don't know how to listen to the market. Well, guess what? This is what we do. This is the gap that we fill. This is what we provide, the service we provide. So what's the first thing you're going to do, regardless of any strategy? But for strategy number 4, the first thing you're going to do is apply rule number 1, the 50-period moving average, to tell you if you're a buyer or a seller. Once you apply that, well, guess what? Price is above the 50. Do we ever sell above the 50? I don't care if the indicators are overbought. I don't care if there's resistance with a ton of institutions selling. It doesn't matter. The market is telling you the overall trend is up. Okay? So that's what you should be listening to, not these outside sources. Okay, so if the market's up, then we want to look for bars that close in the top 25% of their range. Well, as we're looking here, we don't see bars closing in the top quarter of their range. Most of them are closing in the middle. This one closed on the low. This one closed in the middle, but guess what? This one closed in the top 25% of its range. So that qualifies for rule number 2, that we have a valid setup bar to go long. Now, lastly, rule number 3 to generate a valid setup bar requires a specific pattern to be generated. Once again, I cannot divulge what that is because it would be giving away all the rules, and then you'd have a free strategy right on your hands here. And that's not fair, once again, the people that have paid good money for this course. But I can tell you that that requirement was filled. So we have a valid setup bar right here. And on our platform, which you're watching right now, this is the PTS Primo charting platform, a valid setup bar was generated, so it will automatically generate a green arrow below it if you have that indicator on. So this is checking your work. This is saying, okay, this is a valid setup. Now, the basic rules, there are roughly 6 or 7 ways to enter, but the basic format for entry is to enter one tick above that bar. So we're not going to just buy at the market using the basic format. We're going to wait for price to trade above. Remember, ultimately, it's your choice. But while you're learning, we ask our students to use the basic format. And then once you get it under your belt, then you can say, you know what, I'm going to use a different entry point. I'm going to use a different stop placement. I'm going to use a different exit. That's what we want. We encourage that. But everyone has to get a basic entree. Everyone has to get the basic format. So this is what we're providing with you here. So that would be our basic format. And as we can see, the next bar, we never traded there. Now, it's your choice. If you say, well, okay, then I guess it's not going to happen. A lot of our students say, well, the basic format requires for me to only buy in the next bar. Other students say, no, I want to stay in until it trades there. So let's say you decided to stay in until it traded there. And guess what? A bar later it did. So you entered. Now, it doesn't matter where it closes. We're not saying it has to close one tick above. All we're saying is that it has to trade one tick above. So even if we traded there and closed lower on the day, that's still okay. We entered, and then we went up. Okay, nice trade. All right, not expensive stock, but you could have had 10,000 shares. Who knows what your account size is? The point is, this is an example of how easy it is to apply this method. Now let's go forward. All right, so we're still above the 50 period. Let's say you took a nice profit, made a point or so, and then this happens. Well, are you going to think about selling this now? No, not necessarily, because we're above the 50 period moving average. The market, as long as the market is above the 50, it's telling us it wants to go higher. Is that guaranteed that it will go higher? Absolutely not. But we're trying to be consistent. Remember, we're not trying to pick tops and bottoms. Every once in a while, you'll see a great short that works perfectly that is above the 50. Or you'll see a great buy, a bottom buy that works perfectly that is below the 50. Sure, that happens, all the time, but that's not consistent trading. That's more gambling, trying to pick a top or a bottom. And that doesn't work all the time. How many times have you tried to pick a top or a bottom and it continues going in that direction? So we don't want to have one nice trade where we pick the bottom and then the very next one, we give it all back. Remember, we're trying to instill consistency in you. That's what will sustain you, not what some other so-called educators preach, where we can pick the tops and bottoms. And sure, they work 1 year and then the next year you give it all back. Okay, so we're still above the 50. And guess what? We have 3 bars here that meet all of the rules to strategy number 4. This is what we call a cluster. On the software, we automatically will generate 3 up arrows. Now remember, using the basic format, you are required to buy once you trade 1 tick above. Well, here's the first setup. And for the second setup, well, we never traded those, so now you're buying 1 tick above that one. And since we haven't traded there on the third, well, now you lower your entry down to here. So this is a great tool, because if we trade, you can actually enter much lower than actually entering here. And this is why we suggest for our traders to use this in the beginning, because not only will sometimes it keep you out of trouble and get you in a better price, but many times you will miss a bad trade altogether, because if it never trades above there, well, then you would have sidestepped this. You see how that simple entry rule kept you out of the sell-off. So a lot of students will say, well, Steve, these strategies don't work because they generated a bunch of buy signals and I lost money. They went the opposite direction. And I'll say, well, did you use the basic format for entry? And they'll say, no, I didn't. I didn't realize I had to use that. And we always instruct our students to use the basic format while they're learning. And then once they fully get an idea of how they want to trade, then they can apply their own entries out of the variables we give them. But look at this. Had you used this, well, you would have had 1 winning trade, the initial one back here. And then the next 3 setups, you never would have entered because it never traded above. Okay, so let's look at some more strategy number 4 examples. Remember, we just shared with you 2 of the rules that generate a valid setup, and we also shared with you the generic or basic format way for entering, 1 tick above or below. Let's look at some more examples here. And remember, all the examples I'm going to be sharing with you are generated by using our PTS Primo charting platform. I designed this and developed this with Pro Trader Strategies with one goal in mind, simply to educate you and to make it as simple as possible. Everything is 1 click away. It's not like using other platforms I've used in the past, where I'm trying to find an indicator and sometimes it takes me 10, 15 minutes. They have hundreds of indicators and I have to scroll down looking for these things, and it's just ridiculous. And all I want to use is 1 or 2. And then it just makes it so difficult to try and plot and try and watch. It's so easy on our platform. Everything, like I said, it's just basically 1 or 2 clicks away. All right, so we're looking at an example here in ZTS. All right, where is price in relation to the 50? It's above the 50-period moving average. So are we going to be a seller? Absolutely not. Well, someone could say, but Steve, look at this. I mean, we're just going sideways. There's a lot of resistance here. We don't look at that. We only listen to the market. That's where you get consistency. All right? Trust me, if consistency worked by listening to institutions, if consistency worked by focusing so much on earnings reports, if consistency works so much by looking at the volume, then 80 to 85% of all traders would be successful. Unfortunately, it's the other way around. So isn't that kind of a red flag telling you that there's no consistency in those things? If you learn to listen to the market, that's where consistency starts to be heard, all right? So we are above the 50. We're looking for bars that close in the top 50%. We have a few here, 1 here, 1 here, but they do not meet the 3rd rule, which is the pattern, until we get to this bar right here, okay? Now this bar closes above, even though it opened below, it closes above. That's all we're interested in. And it is a valid setup bar according to what we have learned in the course. Remember, we want to teach you what a valid setup bar looks like. Don't want you to rely on just say, well, I'm just going to see where the arrows are and I'll just buy or sell blindly. You have to know why you're buying that. Remember, our goal is, as an educator, is to have you become a part of the process. We don't just want to simply have you take an order based off an up or down arrow, because then we're turning into what everyone else does. We're taking you out of the game and we're having you rely on us. We want you to know what you're looking for. So let's say after taking the course and after a couple of weeks of studying, you say, you know what, I think this is a valid strategy number 4 buy signal. So the way you check your work on our platform is to simply click on the strategy number 4 tab right here in the green strategy tab with all our strategies and techniques. Drop down menu appears and then click on signal arrows. Okay? Once you do that, guess what? You've been validated. You correctly identified a strategy number 4. So you're on your way. You're learning how to spot these. Okay, so what's the basic format for entering? 1 tick above. Okay, now you can enter on the next bar only and say, well, after it didn't trade on the next bar, so I'm not going to do this. Or wait, it's up to you. So we see here on the very next bar, it did trade there. So we enter. Now, are we concerned with where we closed? No. As you can see here, it closed much lower. Now, this is where students say, Steve, this doesn't work. I bought it, and it closed lower. And we say, well, yes, but that's not the rule. We're not trading for one day. We're trying to have a nice trend underway here. So don't worry. As long as your stop's in place, as long as your entry is valid, and you have a valid exit in place, you should be okay. So you entered on the very next day, which was just a couple of weeks ago, and 10 points in the next week. Okay? So it doesn't matter where we close once we enter. 5 days later, the stock was up 10 points. You could have purchased a call or some type of spread strategy with a bias to the long side or whatever you want. But as you can see here, all we're trying to do is show you a high probability entry point. Let's look at HAE. All right, are we going to buy this? Because a lot of you may say, well, Steve, this is fantastic support right here, and all the institutions are buying, and the volume is confirming it, and that chat room I go to really loves this stock, so I've got to buy this, right? Once again, we don't listen to outside sources. We don't care what anybody or anyone is saying. Trust me, that's the way I used to trade 40 years ago. It didn't work for me then, so it's not about to start working now. Focus on what the market's telling you. Where is the market in relation to the buy-sell line, the 50-period moving average? It's below. Do we ever buy below the 50? No. Sure, there may be some tremendous buy setups below the 50, but we're trying to be consistent. We don't care about having one great trade and then giving it all back. We want to have a 2-step forward, 1-step back approach. So, as we know we're going to be selling, we're looking for bars that closed in the bottom 25%. Well, here's one right here, but it didn't meet all the rules of the strategy. Here's another one, okay? So you think that this is a valid strategy number 4 setup according to the pattern. The way to check your work is to click on strategy number 4. In the drop-down menu, click on signal arrows just to validate your work. And as you can see, we have a valid strategy number 4 sell signal because there's a red arrow. So great. Now, once you get the strategy under your belt, you can enter any way you'd like. You can place a limit at a different point. You can sell at the market. You can do whatever you want. But the basic format for learning for newbies of this course is 1 tick below. That's the only time you will sell. We don't need it to close below that line. We just need it to trade there. So, as we see in the very next bar, it traded there and then closed higher. Once again, this is where students say, Steve, this doesn't work. I sold it, but it went up higher on the close. We're not concerned with it. That's not part of the rule, so why would you be concerned with that? We're not just in this for one day. Because as you can see later, 1 day later, the stock fell out of bed 15 points, okay? Obviously, some news came out to cause it to gap down. Were we aware of that? No. We are not in any way requiring you to follow the news. If you want to follow news, that's up to you. Remember, it's not our job to tell you how or how not to trade. Our job is simply to educate you. And in our education, we don't focus on any news at all. I stopped looking at news, I'd say 43 years ago. So there's no reason for you to look at news if you don't want to. So there was obviously some news that made this gap down, but why would we care about that when we already had a sell signal 2 days prior to that was telling us to sell? As we look at Lulu here, we see that we're above the 50. A valid buy signal has been generated, so we want to buy one tick above. The very next bar, we entered, and 11 points in 3 days. Another example here in DVA, we are below the 50. Even though price is rising, we have a bar that closes in the bottom 25%. It meets all the requirements of the pattern. We're below the 50. A valid sell signal has been generated. Using the most basic entry, we want to enter 1 or 2 ticks below. As you can see here, it gapped down. Now, it's up to you. If you can get a pre-indication, if you say, well, Steve, it's going to gap down about a point or two, well, should I take it? Remember, this is not a system. You're not required to take a trade if you don't want to. This is not, we don't keep statistics on this because we encourage everyone to trade it differently. Some traders use a specific entry. Other traders decide not even to trade at all. So there's no way to keep any records of what the odds are for successful trades or what the risk-reward ratio is because everyone trades it differently. That's what we encourage. We do not believe in systematic trading where everyone trades the same way. So if you don't want to take this trade, you don't have to. But if you wanted to, well, you could have gone short off the opening, and look what happened. In the next couple of weeks, 15 points to the downside. And if you miss that, the beauty of that is many times other signals will be generated. You could have taken this signal and perhaps made 7 or 8 points to the downside. Facebook. Okay, Facebook generated 2 signals right here. This is what we call a mini cluster, where 2 signals are generated right next to each other. All right. Even after we entered the first one and after we entered the second one, not much has happened. We've basically just gone sideways. All right. But oftentimes it takes a little bit for the momentum to click in. Now, you haven't been stopped out. You're in the trade. So, if you want to, you can decide to hang on. Or even if you said, well, listen, I entered here. It's closing here. I can take a small profit. It's up to you. But had you stayed in, well, guess what? 25 points in the next week. Now, once again, did we know this was going to gap up 25 points? Absolutely not. But the market was telling us it wanted to go higher. There's no reason to follow fundamental news if you don't want to or need to. KORS, this was a past year in October before it changed its name, I believe, before it changed the symbol. But prior to that, we were below the 50-period moving average. We had a mini cluster of sell signals. Now, the first one worked out pretty well. You would have gotten short right there. And the second one is kind of going sideways. But for all intents and purposes, we're kind of really just treading water here. Nothing has kicked in. As I stated, sometimes it takes a little time for the momentum to kick in, but we're still below the 50. There's still valid signals. You're still short, and ultimately it did generate in your direction. 30 points coming into the end of last year. Now let's look at that initial chart we showed you now, okay? Someone looking at this would say, well, Steve, we're going sideways, but remember, we're above the 50. So there's absolutely no reason to want to short this. None. I don't care how much resistance is right here by the so-called institutions. I don't care how much it's being confirmed that you shouldn't be buying this. It doesn't matter. I don't care how much someone is saying the earnings are going to be terrible. Don't buy this. What is the market telling you? It's telling you it's above the 50, so the overall trend is up. Then it's also telling you that this is the first bar that closed in the top 25%. So rule number 2 is met. Then rule number 3, the pattern has also been met. So a green up arrow is generated below the signal bar. Now, we want to buy one tick above. The very next bar, the very next 2 bars, we never traded there. But finally, the third bar did. Now, you have the option to either wait that long, or if you say, you know what, I don't want to wait that long, I'm not going to take that trade. Once again, it's entirely up to you. This is why we don't keep statistics, because we encourage everyone to trade differently. So had you stayed in and waited for it to trade 1 or 2 ticks above, you would have entered, and the next day, 47 points, okay? Did we know why this gapped up? No. Do we have any idea now in hindsight why it gapped up? No. Don't really care. All we care is that, we're applying our rules. We're applying the different exit rules. Now, we have different exit rules that would have gotten you out, let's say, this day. We have other exit rules that would have gotten you out up here. Or we have other exit rules that would still have you in the trade. It's up to you to decide, not us. We do not trade for you. We teach you how to trade as Specialist Trading and Pro Trader Strategies. Now, let's look at some other markets. Once again, I told you we have a propensity here for looking at stocks, but trust me, I trade most of my strategy number 4 on the E-mini futures, okay, and on some currency pairs. So it can be applied to anything. Now, first of all, let's look at an ETF. That's the spiders. That is the ETF that represents the S&P 500. A lot of our students like to trade ETFs, and they like to apply our strategies to them, but not to actually trade the ETF, but to use it as a market directional tool. For example, someone looking at this would say, well, there's absolutely no idea what's going to happen here. We don't know. But if you apply the 50-period moving average, you say, well, the odds are it wants to go higher because the market's telling you it's above its 50, and it's telling you the overall trend is up. Now we have a bar here closing in the top 25%, giving you more feedback that it wants to go higher. And then lastly, the third rule, the pattern recognition rule, has been met. So now you have a valid setup bar. So the market is not only telling you, it's screaming that it wants to go higher. So if you think about shorting the spiders, which were 2 weeks ago in February, I would not have told you to do that because I would just say, listen, I'm not telling you how to trade, but according to our setup here, the market's telling me it wants to go higher. I'm not saying it wants to go higher. The market's saying it wants to go higher. So I would suggest to not short this. Now, if you were going long, you would enter just above here. Now, if it continued to go lower and lower and lower, well, you would never lose any money. But as you can see, on the very next bar, it traded there and then closed below. We don't care where it closes. All we care is that it traded above. So now we're long, and in the following week, coming into last week, the spiders were up 8 points. I believe they're actually up higher than that right now. Now that actually estimated out to about 800 Dow Jones points. So what a lot of our students like to do is they say, well, listen, I don't trade the spiders. I don't have enough money for that account to trade a $200 or $300 stock. But if there's a buy signal that's valid, then I'll use that as some type of an edge to know that I should think the market's going to go higher, and maybe I'll buy some options in another stock that kind of mirrors the S&P, or simply buy a stock, okay? Or maybe stay out of, if I'm aggressive shorter, then think that I'm not going to short. But this is how you can also apply it, another way for trading. If you like to trade other markets, well, let's look at a 30-minute chart of the E-mini futures. Okay, price is oscillating above and below the 50, but now we have 1, 2, 3 consecutive bars closing below. So the market's telling us the overall trend is down, and this bar closed in the bottom 25%. So we think that there's a valid sell signal on a 30-minute chart of the E-mini. This was just February 14th, just last couple of weeks ago. So in order to check, make sure I'm right, because let's say I've been studying the course for the last week or so, I click on strategy number 4 tab. In the drop-down menu, click on signal arrows, and it tells me, yes, I'm right in identifying a valid strategy number 4. Now to use the basic entry, I simply want to enter 1 or 2 ticks below, and I'm short on the very next 30-minute bar. All right, see how the process, nothing changed. I'm still using the exact same process for a 30-minute chart of an entirely different market, the E-mini futures. And in the next couple of days, it's down 17 points, or roughly $850 per contract. Now, some of our traders are quick traders that like to get in and out quickly. They would have said, Steve, I took a quick point. I'm happy with that. That's fine. Other traders would say, no, Steve, I kind of did a one-to-one risk-reward ratio on my stop. I got out there. I did very well. Still others would say, well, no, Steve, this is going lower. I'm going to stay in as long as possible and use your stop placement that will get me out when the market turns around. This is why we don't have any statistics. We're not a statistical company, and we can't tell you that, oh, yes, this is the risk-reward that you should be using, or this is the percentage of winners, percentage of losses, or this is the worst-case drawdown, because we encourage everyone to trade differently. And if everyone trades differently, everyone's going to get different results. But most likely, if you're in sync with the basic format, your results may be positive. It's just that you should never, as I stated in the beginning, never mimic or try to copy another trader. It's a recipe for disaster. The entire industry is based on that, and that's why the statistics show that 85% of all traders fail, because you're following what someone says in a trading room. You're following what some institution is doing. You're following what someone is saying in a webinar. I never give recommendations or tell people what to buy or sell. All we do is teach you what the markets are saying. Here's a 4-hour chart of the British pound. This was going back just last week, okay? Actually, it was the beginning of this week. Once again, it appears that absolutely nothing is happening, just based off the last 5 or 6 days, or 5 or 6, a couple of days, I should say, 5 or 6 bars. But once we apply the 50 period, well, guess what? The market's telling us that even though it looks we're going sideways, we really want to go higher. Now we find a bar that closes in the top 25% and meets the pattern rule. So let's check our work. Let's see if we've learned how to properly identify a valid strategy number 4 signal. Just click on strategy 4, click on signal arrow, and guess what? We were right. So we want to buy 1 pip above, and we would have entered on the very next bar, the very next 4-hour bar. Okay, we've got a nice profit. We can exit if we want to using one of our exits. We can stay in. It's up to us. It would have been a good idea to stay in because about 8 hours later, you've got 160 pip gain, which would transfer over into about $1,600 per contract. Now, I'm not saying that everyone would have made that. Potentially, you could have captured that. It was entirely up to you. And this just happened this week. All right, so let's review strategy number 4, a strategy I've been trading for over 4 decades and one of the most consistent methods I've ever traded. It's for all traders, anywhere from beginners to advanced. You want to look to catch momentum because that's what we're trying to do, catch momentum in the market, oftentimes before it even happens. As you can see, it's extremely easy to apply. An intensity level is very moderate, number 2. Only uses one indicator, and you already know what that indicator is. That's the 50-period moving average. Any time frame, any direction, any market, you already saw that. I shared with you intraday examples in different markets and different directions. Now, you're going to receive those automatic buy and sell arrows if you become a member of our course. But remember, they're for educational purposes only so that you can fully check your work to see if you're in line. All right? Our edge here is consistency. I'm not going to sit here the way some other guys do in presentations that say, oh, no, we never lose. In fact, we've had 1 loss in the last 10 years. I don't believe in any of that, okay? There will be losses from time to time. That's okay. Many times I'll have a loss my very first trade of the day, and then 2 trades later, I'm back to making it back, and then I have a profit. I'm not guaranteeing this to you, but that's just what consistency means. But we always want you to first learn the strategy like the back of your hand, and so the only requirement we do have is that you paper trade first. Because trust me, so many students say, gosh, Steve, this is so simple, and I see these positive signals all over the place. They're all winners. I'm going to start trading this Monday. And then they jump in, and inevitably the very first couple of trades are all losses. And most of the time, they're really not losing trades. They're just because they were implementing the rules incorrectly. Perhaps one of those 3 rules wasn't met, and they were maybe buying above, or I should say buying below the 50 or selling above the 50. They just weren't using the rules correctly. So we always want you to paper trade first. It is a fast-fed requirement that you paper trade. And then once you fully understand the process, then start to trade with real capital, starting off in small increments, okay? Now ask yourself, before we go into question and answer portion, do you think this strategy could have helped your trading this past year? I know a lot of presentations you may have gone to in the past. I know I still go to webinars just to see what other people are talking about and teaching. A lot of times they show these miraculous ways of trading, the new indicator, a new method, and I'll look at the examples and they're 6 months to a year old. And I say like, wow, well, how do I know that's working in the current market environment? As you've seen here in the last examples here, most of these examples were sometimes just the last couple of weeks, sometimes the last couple of days. So we're not trying to, to piggyback on anything that's worked 6 years ago. These are things that happened maybe 6 days ago. All right, I have a great attendee discount for all of you today for taking the time out of your Friday to join us today and really, hopefully, to get your trading on track for 2019. We're going to offer you our strategy number 4 course. All right, you're going to get instant course access. It's detailed instruction, roughly about 15 videos. You're going to learn all the different variables for entries, exits, and stops. You'll get the educational buy and sell arrows. You get the full course rules, and we'll supply you with the indicator add-on. So if you like to trade with TradeStation, Metastock, MT4, NinjaTrader, we will supply you with the add-ons so that you can upload them onto your platform, and they will generate the up and down buy and sell arrows, as well as give you those clues so that you can start to learn how to trade on your own. On top of that, you're going to get educational correspondence. This is my personal email so that you can contact me whenever you want with a question. But we're not going to stop there. We have a special offer for you today. All right, we're including a special bonus, and that is we're going to also include 6 months of our PTS Primo charting platform. All the examples you saw today, the ease of clicking on strategy 4 and getting the arrows and everything is right there in front of you. Now, 6 months of the platform usually costs close to $600. Don't worry, we're not going to charge you that. In fact, we're not even going to charge you anywhere close to that. We're going to give you 6 months free, totally free with your purchase of the Strategy Number 4 course. Let me show you what we have here on the PTS Primo charting platform, because we're not going to just give you Strategy 4. We're also throwing in our proprietary buy-sell line feature. We have 4 different ways to view the buy-sell line. It's a really great feature. We're also supplying the proprietary exit levels. So you'll get proprietary exit levels on the platform, so you'll know where some of these exit levels are that automatically are generated. So you'll know in advance where these exit points may be. Just one of the different ways for exiting. Over 90 technical indicators included, so you can tinker under the hood and experiment with them. But here's one of the best things I think of, because I really took a lot of time and effort in designing this with Pro Trader Strategies. This is our signal scanner. You have the ability to scan for Strategy Number 4 setups on a nightly basis, even on an intraday basis. We supply you with all the different market baskets. In other words, you can look at the S&P 500, you can look at the NASDAQ markets, you can look at currency pairs, you can look at cryptocurrencies, all Bitcoin, all the different types of markets. You can look at futures markets. We even have the DAX markets. We have Indian markets. We have so many different exchanges now. All right, Pro Trader Strategies has done a great job of supplying all this different data for you so that you can trade any market you'd like in any time frame. Let me show you how simple it is, though, because on top of that, it is so simple. Trust me, I've traded some platforms where I try to generate a scanner, and it literally takes me hours just to figure out how to scan for a certain setup. This scan that I'm about to show you will probably take less than a minute to do on a nightly basis. Let me share with you what I mean here. All you'd have to do is, on the platform, click on the Strategy Number 4 tab, and this time, instead of signal arrows, go down to Scanner. Once you do that, a window like this will appear on the platform. This is our Strategy Scanner page. All right, click on Load Symbols. We provide you with a list. Once again, could be the Indian markets, could be cryptocurrencies, could be the Dow Jones 100. It makes no difference to us. You can trade whatever market you want. In fact, we show you how to create your own list of stocks. Let's say you want to trade a certain market, 20, 30 stocks. We'll show you how to do that, and you can scan for those on a nightly basis. Once you click on whatever you're interested in trading, it appears in about 10 seconds, all right, on the spreadsheet. Then you just simply click on Scan. And in about another 30 seconds, you'll see a series of either green or red horizontal bars. The green bars mean there's a buy signal in the corresponding stock. The red bars simply mean there's a sell signal in the corresponding stock. Now, let me show you how simple this would have been if we had presented this webinar 2 or 3 weeks ago, all right? And let's say you said, wow, this is great. I'm going to become a member of the course. You could have scanned, all right, on February 8th, at the close of February 8th, just a couple of weeks ago, and seen in ROG that there was a buy signal generated. You say, okay, well, this looks pretty good. There's a buy signal in this. It meets all the requirements. I'm learning how to see this, and maybe I'll buy some calls in this. Maybe I'll actually buy the stock. And then this was on a Friday. And then the very next trading day, which is on Monday the 11th, another signal is generated. So you have a mini cluster here, which, although not guaranteed, is just a good sign that the market is telling you it wants to go higher. So if you didn't get on the 8th or the close of the 8th or the next day on the 11th, well, maybe you can get on and buy this on the next day, the 12th. As you can see, it traded above, and coming into the 21st, which this was this week, yesterday, the stock was up 35 points in just 2 weeks. Okay, this actually happened in the last 2 weeks. So remember, we're not cherry picking the best trades and piggybacking off of something that worked 6 months or a year ago. This is, if we had given this presentation, you decided to become a member of this course, you could have scanned for these signals, just 2 weeks ago and taken advantage of them. Now remember, we always require you to paper trade first, but you can get all these abilities on the platform. You can study and research and see just how valuable this is. So this is how beautiful the scanner is. And this process generates really dozens of Strategy 4 signals on a nightly basis, and you can pick and choose from them which ones you'd be interested in. This is included with the free PTS Primo charting platform for 6 months. Now remember, our credo is as a teacher. We're not here to tell you how to trade or how not to trade. We realize that we have a technical bias in all of our trading. But if you like to listen to news, if you feel you must be trading with fundamental news, we specifically designed to have free Bloomberg TV on the platform. So while you're looking at the charts, you can also have a window that is our media page. You click on the media page and there is free live Bloomberg TV. So anytime a news announcement comes out, anytime there's an earnings report or some economic report, you will be privy to it as it's happening live. This is also included in your free 6-month trial of the platform. And lastly, we have personalized tech support. If for any reason there's an issue where you can't load up a page or get a chart, we will be there in a matter of moments to resolve the issue for you. This is all included with your strategy number 4 course purchase. Now, let's break it down, okay? If you purchase the strategy number 4 course individually, it would cost you close to $700. If you purchased 6 months of the CTS Primo charts, it would cost you close to $600, okay? So altogether, the total of that would be $1,277, or you'd be spending roughly $1,300. That's not tremendously a large amount, but still it's too much for us to try and get to know you and to have you become a consistent trader. So we're not going to charge you anywhere near $1,277. We're going to discount the price tremendously. You're going to get strategy number 4 along with 6 months of our PTS Primo charting platform for only $497, okay? Less than $500. You can be up and running as soon as today. You can start to learn all the entries, all the exits, all the stop placement, learn that pattern recognition for less than $500. But this is for a limited time only. Remember, you're also getting 6 months of the PTS Primo charting platform. And I think the most important thing is you're getting educational correspondence from yours truly. Anytime you have a question, anytime something doesn't make sense in terms of learning how to trade, you can always email me and I'll get back to you as soon as possible. I was answering emails today from our students this morning. So this is a great offer for less than $500. You saw all the examples I shared with you today in different markets, in different directions, different time frames. You owe it to yourself to become a consistent trader. This, in my opinion, is one of the most inexpensive ways to do it by becoming a member of our strategy number 4 course. On top of that, getting 6 months of the PTS Primo charting platform for free. Here's how to take advantage of this, okay? Contact Pro Trader Strategies. I developed the platform with them and the courses. I would suggest if you have any questions that are of a technical nature, because I'm just involved in the teaching and trading of the courses. They're involved more with the platform and with the discounts and with pricing. You can call them with no obligation at 310-598-6677. Now that link below, that rather large link you see at the very bottom, that's the link that will take you to the sign-up page and give you more information. Now I realize it's not a live link, it's too long to copy, so we've posted a live link in the chat box. So all you have to do is click on the live link in the chat box and it automatically will take you there, okay? Now I stated I would answer your questions, so I'm going to leave this information up here and I'm going to open up the question and answer box in your GoToWebinar column on the far right in the bottom there. So if you have any questions, now is the time to type them in. I see we also have some. Theo says, does this indicator repaint? Well, first of all, this is not an indicator. This is a strategy, okay? So if you're talking about strategy number 4, no, it doesn't. In other words, strategy number 4 needs all of the rules to be met. Everything needs to come into place. And then once it does, it's a valid signal. And that's all it's telling you. Now, it's up to you to decide how you want to take advantage of that signal. You can decide to buy or sell, depending on what type of signal it is, 1 tick above, 1 tick below. You can use any of our other 6 or 7 different entry placements. You can use any of our 6 or 7 different exit placements. You can use any of our different stop placements. But we give you a basic format in the beginning for you to learn. And then once you feel you have it under your belt, you go from there. But nothing is repainted because a signal is generated. Once it's there, okay? And it's up to you to decide how you want to take advantage of that, okay? It's not an indicator. This was a strategy. How can one use it on a live trade? Well, sure, you can use it on a live trade. We always request that you paper trade everything first, but the same process I just shared with you, you would use on a live trade. Now, we don't use live charts on our presentations because you may have to sit and wait for something. You know, I don't want to keep you here all day while we're waiting for a strategy 4 signal to be generated. And this way, I can share with you dozens of setups that occurred in the last couple of weeks and show you exactly what the process is. So that's, you know, I know a lot of traders like to have live charts, but, you know, if we did that, you may be wasting a couple of hours waiting for a signal to appear, okay? Theo asks, what's the difference between strategy 4 and 9? Well, I don't want to get into strategy 9 that much. That's a brand new strategy of ours, but As you've seen in our copy here, strategy 4 is a momentum strategy. We're looking to capture momentum. The only difference between that and strategy 9 is strategy 9 is a pullback. Strategy number 9 is completely different rules, completely different indicators. It's just looking for price to sell off in an overall uptrend, and that's where you buy at lower prices, or prices to rise in an overall downtrend and you sell at higher prices. As you see here, we're not concerned with that. We're simply looking at a specific pattern, where we close in relation to the 50-period moving average. If we close in the top 25%, now that can happen at the top of a move or at the bottom of a move, makes no difference, okay? So they're two entirely different methods and strategies, okay? Good questions, though. Any more? Someone's asking, is this based on the 50-period moving average? Yes, the simple simple moving average, okay? Now, a lot of students always say, well, why are we using the simple? Can we use an exponential? Remember, a system would tell you you can only use one indicator. This is not a system. It's a strategy which allows you to become a part of the process. Now, the majority of our students apply the 50 because they've seen over time and through paper trading that it works the best in terms of generating consistent signals. If you feel as if you want to use an exponential or a weighted moving average, feel free to do that. We always encourage our students to experiment. Remember, we're educating you. We're not telling you how to trade. This is not a systematic course where you have to trade the same way each and every time, regardless of market environment, regardless of how big of an account you have. This is we're an educational course, and we encourage you to experiment. We want you to become a part of the process. But just know that if you take an indicator or apply something that is not any part of our education, you have to be responsible for those results. So we always ask students to first trade and paper trade with the basic format, which I just shared with you today. And then once you feel that you're really starting to understand this process, and you feel like, well, I've got this under my belt, then you can work out from there and apply a different indicator or use a different entry or exit rule and make it yours, okay? Because that's what we want to ultimately do. It's our opinion that the only way traders become consistent is by making the strategy yours, by becoming a part of the process. This means that people say, what does that mean, making it mine? This means you make the decisions. You don't go to a chat room and find out what everyone else is trading. You don't listen to what the pundits are saying on TV or what the earnings reports are that that you have to wait with bated breath. You really put your emphasis on just what the market's telling you. We don't care about what the institutions are doing or what the moving averages are. We don't care about that if they're crossing over or where the volume is. Trust me, I used those things almost 45 years ago. They didn't help me make any money at all. And it's my opinion that they're really contributing to that statistic where 85% of all traders fail. It's because there's no consistency in them. They're too difficult to really apply. You'll see that all of our methods, all of our strategies are extremely simple, anywhere from 2 to 5 rules tops, and then that's it. And then we work with you. But we always want you to paper trade first. Okay, any questions more concerning discounts or anything with the platform, contact Pro Trader Strategies. They would be happy to work with you, and this is an extremely, extremely low price. So, as we stated earlier, the first thing we said about Strategy 4, work in any market, any time frame, in any direction. So it doesn't matter if you're looking at full stocks, penny stocks, futures, currency pairs, any market, any time frame. Okay, it's all relative. As we conclude, I just want to say thank you so much for attending. I hope you learned a little bit. We're different from other presenters in that even if you decide not to become a student of ours, we always like to leave you with some education. And you got some really great education today in terms of the 50-period moving average, in terms of seeing where a bar closes, and in terms of a very basic entry point, okay? As we conclude, I just want to say thank you so much. I wish you the best of luck of trading, and I really strongly recommend you take advantage of this very discounted price before it goes away and you go back to spending close to $1,500, okay? Thank you so much. I wish you the best of luck as you take one last look at our disclaimer. I hope you got something out of this once again, and I look forward to all of you becoming students of mine in the Strategy Number 4 course. Thank you so much. Have a great weekend. I'll see you next time. Bye-bye.